Hi, welcome to another edition of I Dig Day Trading. And today we're going to talk about Fiverr and the Motley Fool. Yesterday, the Motley Fool put out a recommendation to buy Fiverr. That's part of what their service is. If any of you guys aren't familiar with Motley Fool, they're a stock recommendation platform. They have free articles, and then if you want to buy the level entry or entry level subscription, it's about $99 or $149, depending what deals they got going on. And they give you a couple new stock picks a month, and basically what's been happening since we've had tons of people trading, people opening up new accounts, the so-called retail investor, the amount of people trading now has been insane. I'm sure you all know, since the pandemic started. And so what's happened is I've been a member of Motley Fool for a few years. And so they always would put out a Motley Fool recommendation. You'd read it, you'd digest it, think about whether or not you want to buy it or not, how much you want to buy, maybe watch the price a little bit. Maybe it looks like it's a little too high, and you think okay, maybe I'll wait for it to come down a bit. But what's been happening now is that I think because they have I will say this with Motley Fool, you get good bang for your buck. If you're someone just starting with trading and with investing, and you want to get your feet wet, I think Motley Fool is a good place to start. Their investment philosophy is to hold a stock for, at the very least, 3 to 5 years. They would say, save it till retirement. They want to teach you how to build your own portfolio. And they do a lot of the legwork in terms of studying and researching companies, their fundamentals, their executive staff, and every technical and fundamental kind of metric that there can be out there. And they do pretty well. They have a good track record. They're not always right, but for the most part, they're more right than they are wrong. So with this situation, now, I will say, when they put out a Motley Fool recommendation, especially if it's a new stock, one that they haven't recommended before, this is a company Motley Fool's been around for at least 25, 30 years. Something like maybe 20, 25. And, they put out these, so sometimes they might rehash an old stock that they recommended a few years ago or a few months ago. Anyway, Fiverr is something that they have recommended before in the past. And as you can see in this article from Seeking Alpha, that Fiverr climbed 12% right after the Motley Fool released another pitch for the stock after 1 p.m. And then the theory is being circulated on Twitter. This is something I noticed a few months ago because I follow Motley Fool, and this happened with Lemonade, is that now when they put out a recommendation, the stock will spike anywhere between 10 and 20%. Because now the sheer volume of people that are now following Motley Fool's recommendations, they don't take the time to read what's going on with the stock. And because of that whole FOMO thing, their fear of missing out, and they're like, oh, I better, as soon as Tom and Dave, those are the two guys that run Motley Fool, as soon as they put out their recommendation, as soon as I see the ticker symbol, I'm just buying shares. And that's what people have been doing. And now Motley Fool is under some sort of, I wouldn't say investigation, but they're coming under the same umbrella of price manipulation, stock pumping. Like the Wall Street Bets people are now falling under that category of pump and dump type so-called stock gurus on Twitter are coming under that kind of scrutinization, I guess is one way to put it. And I will say, not that I have a bias, but I don't think Motley Fool is undertaking price manipulation. That they're purposely trying to move the stock up a little by little, because some people are saying that they noticed that Motley Fool will mention a stock, in the course of a 3-month period. They'll mention it 3 or 4 times, and you'll see bumps in the charts. Let me see if I can pull one up for you right now. So basically, this is Fiverr. And so yesterday, my family and I were all glued to our laptops when Motley Fool, they come out with their stock recommendations on Thursdays at 1 o'clock in the afternoon. And there we were, 10 minutes to 1, waiting and waiting, patiently waiting. And so this time it was Tom that came out with his, and he mentioned Fiverr. And as soon as he mentioned it, I didn't buy. I decided not to buy because I think Fiverr is already up high as it is, and it's been recommended before by Motley Fool. And I think really the ones you really want to focus on with Motley Fool are the ones that are new recommendations, ones they've never mentioned before. But still, it went up 10, 12%. But as you can see, let me see if I can zoom in a little bit here. So, it was trading through the day, pretty flat in the 245, 237 region, through the day. And then as we got closer to the stock recommendation moment, it won, we'll say 113, it just pounced up like in a minute. It went up from 244 to, so a little bit, ultimate high to 279, and it didn't stay there very long, and then it leveled off at 274, and then for just a few minutes it just did this like sideways action, and then it just kind of stabilized along this VWAP at 262, we'll call that. Now, the thing that my wife and stepson and myself were all kind of, I wouldn't say skeptical, or a theory we were creating, is that as soon as they mentioned it, the stock was already up. And as I had my page open, this page open, and I just put the letters in, and I think I'm going to go out on a limb on this. One of my theories is that I think Motley Fool tells its writers, and they have like at least, I don't know, probably hundreds of writers, if not, somewhere, a little bit less, a little bit more. And they probably, like most writers, they probably don't pay them very much, but what they probably do is they probably tell their writers, like before they release their stock pick for that week or for that month, they probably give their writers a heads up a little bit ahead of time, because I've tried to get in on this before in the past. Because in the past, what used to happen is with Motley Fools, now they're doing things differently. They now do a live streaming where Tom or Dave will talk for 5 or 10 minutes, giving you their impressions about the market in general, keeping you kind of like suspended while you're waiting for them to give the ticker symbol. And, so that's how this is new. Prior to that, what they used to do is they used to send you used to have to open up the page. You remember you had a premium membership that you paid $100 for, $150 for, and you go to that page and you just keep refreshing the page, like when you got close to 1 o'clock. And then finally, bang, you saw, what Tom or Dave recommended, and then you would go out and buy it. And then what would happen is be a lag time. That would happen around, say, 1 o'clock. Then about, I don't know, say like 1:10, they would put out the email. So a certain percentage of subscribers would see the thing right at 1 o'clock, the hardcore people. Then at 10 minutes later, the people who got the email alert, they get it, and then they'll buy in. And then another 10 minutes later, let's say like at 1:20, you would get the alert on your phone. So what I would notice is, and I noticed this with Lemonade, and I'm sorry I don't have the chart to pull up right now because it was a long time ago, and it's kind of hard to put up a daily chart with that right now. But what I noticed was these steps, and what would happen in the old way was that when the first alert came out, like when you refresh the page, the stock would jump up 5%, and then it would kind of level off and maybe go up and down. Then when the email came out, you would see a spike again, and then it would level off and blah, blah, blah. And then 10 minutes later, boom, it would go up again when the SMS message would come out on people's phones. They're doing away with that because last week I tried to do this, and their system's been crashing because I think they have so many memberships now, and so many people logging in all at the same time to refresh the page. I mean, I couldn't even log into Motley Fool at 1 o'clock on a Thursday when they bring out their stock recommendations. And it was just frustrating. And I think that's why they're now doing this streaming service. So if regulators and SEC are trying to say that there's price manipulation going on with Motley Fool, in Motley Fool's defense, all I can say is that they've been around for 25 years. They have paid subscriptions where they give stock recommendations. They don't tell people they tell people to actually study, and research the company before they put a position in. And they also say, like, it doesn't matter to them if it's at a 52-week high or somewhere else on the spectrum. It's all for a long-term investment. And I think the only reason why people think that there's price manipulation, and that goes with the Wall Street Bets guys and Motley Fool in this case, or anyone that's a fairly legitimate advisor, is that there's just the amount of people trading now is insane, and the amount of people who are stuck at home, or they're working from home, or they're unemployed and they're trying to find another way to make money online. They're just crashing systems. The other day, I tried to log into a live streaming of Tim Bowen. He's a penny stock and swing trader kind of guy, and he has various platforms that you can chime in at a specific time, in the pre-market to listen to what his advice on what he thinks is about to move when the market opens. And he put an email out on several of his platforms and inviting people to this, and it was free, and it crashed. He had it on Instagram, he had it on YouTube, and I think he had it on another platform. I forget which one. And all three were crashing, and people were writing in comments and blah, blah. And he just said, I'm sorry. He's like, for some reason my system's crashing. And it's probably because it's just another example of just so many people are hungry for knowledge and have the time to do this. And so I guess what I'm going to try to say right now is, just to close on a note, is that the cool thing about all this is that it is self-empowering. People who never thought they could ever trade or intimidated by trading are learning a lot from experienced traders and investors, whether it be Motley Fool or Tim Bowen or Tim Sykes or any number of YouTubers or people on Discord or whatever. And there's a lot of charlatans out there, don't get me wrong, but if you have half a brain and you can vet all these or try things out with small positions with any one of these gurus, you can pretty quickly find out that someone's either legit or not legit, or someone's. So anyway, I just want to say, I think it's unfair for the regulators, and maybe in this case even the government might step in accusing some of these people like the Motley Fool for price manipulation. It's just a lot of people are want to empower themselves in these times, and this is how they're doing it, and it's creating a lot of volatility and a lot of just sheer volume. So can you dig it? And so that's my thing today about Motley Fool and Fiverr and whatever else. All right, I'll see you in the next video. Take care. And please leave a comment about what your theories might be about what's going on with all this wonderful stuff. If you've had some experiences with Motley Fool, I'd love to hear them. All right, take care. Bye-bye.